Advising clients across Cape Cod and across the country. Here he is, your host, J. Christopher Boyd.
All right, welcome. Thanks for being here. This is Something More with Chris Boyd. I'm your host, Chris Boyd. I'm a certified financial planner professional, and my office is Asset Management Resources. We're a registered investment advisor firm in Massachusetts, both in Dedham and here on the Cape in Hyannis. Thanks for being with us today. We've got a fun show planned, lots of interesting things to talk about. They're a pretty active week this week. Hope you'll join us by calling in at 508-771-8900. That's 508-771-8900. We call the show Something More with Chris Boyd because we like to talk about not only those important dollar and cents issues, but also those quality of life issues that make the money matters matter. So we can talk about whatever's on your mind, any financial questions you might have. Joining me today is Mike Burton. He's in studio as a guest host.
Thank you, Chris. Thanks for having me back.
Thanks for being here. So you know Mike Burton from our weekly Slade Mortgage Minute. And so we'll certainly be talking about some mortgage-related matters, I'm sure.
Let's hit all topics. We're going to touch all the bases today.
Just to give people an overview, I mean, there's so much to talk about. We have the end of the quarter, so big, halfway through the year, where we stand financially. A lot of things happening over the last several weeks as a result of some comments by the Fed about 4, 5, 6 weeks ago.
A lot of activity up and down. People are nervous, not so nervous. We're going to have a lot of different opinions to go over today.
So there's definitely some financial topics to touch on.
No, that's exactly the point I just want to make for everybody out there. I know I had a client come in and say, "What's the big deal? Who cares about bonds?
Yeah.
Who cares about whether they're going to buy them or not buy them?" I said, "Well, let me just talk to you about what the rate was 2 weeks ago for a mortgage and what it is now. Or even 3 weeks ago, it's gone up almost a point."
Yeah, from its in the last month or so.
Yeah. In mid-May, we were around 3.5%, 30-year fixed, no points, just a generic.
Yep, I saw this.
And now we're 4.5%. We touched 4 3/4 in the beginning part of this past week. So it's gone up about a point.
Yeah.
So you get people getting very...
So that's a very real implication for listeners and for people who are investing in a house or buying a house or whatever it may be.
But I temper that also with this, Chris, and I firmly believe this after doing business for 2.5 decades, is that these rates are still phenomenal.
Oh,
and we've talked, you and I have talked this so many times in the last couple of years about, I keep saying, it's like a broken record, they're great rates. And I know I do. But even though the rates have gone up, they're still terrific. At even 4.5%, we're a heck of a lot better than where we were back in even 11 or 10 when we were closer to 5. And even back in 2001, 2002, we were touching 6 and 7%.
Yeah.
So
it's important to put it in perspective. It's not to say these are historically, high rates or something like that. It's simply that the rates, the outlook, in my view, whether we get a blip, whether we get, things, the way markets tend to move is not in a straight line. We're going to see bouncing around in all likelihood. But the trajectory is that we're starting a different.
And we knew it was all coming. Everybody's talked about it. We knew it was coming.
And this may be a change in paradigm when it comes to bonds as part of a portfolio as well, because for the last 30 years we've seen bonds in essentially a declining interest rate environment from when you look back to 1980s when interest rates were double digits and so forth. You've got stories, I'm sure, about the mortgages in that era,
people refinancing from 20 down to 11, thinking they
won the lottery or something.
Yes.
Yeah. So in any case, that kind of a move, we've seen this gradual but significant move down, which is a positive for the bond owner, the person whose price is going up as the rates go down. That may be a changing point where for a while at least, maybe not for the next 30 years, it may not be that kind of a moment.
Well, we just had 30 years of that.
Right. So it could be that we're on a different footing where investors and the like haven't seen this before, where bonds are in a moment in time where interest rates will likely be rising, at least for a while, maybe not forever. It may not be that this is
Not
the
gonna be big
moment,
jumps
you
all
know,
the time either.
but, you know, we've seen as interest rates have risen in the last month or so, an erosion in value of those bonds, or bond mutual funds or ETFs or whatever it is you own. And so it makes it a little bit turned upside down. Normally we look to the bonds as being the stable or income producing part of our portfolio, and stocks play as where we expect to find volatility and risk. And now we're seeing from bonds a little bit more volatility than we have in the past. And it may be time to think a little bit differently about how do we approach our bond part of our portfolio.
So this goes to the initial comment I brought up, is that you must have clients out there, or there must be people thinking out there. They need to talk to a professional like you and figure out, is this an opportunity, or is this a time event that I need to reassess where the portfolio is?
Yeah, I think it really is. I think it's an
That's what you're
excellent
getting at.
time. Absolutely, I think you're dead on. It's an excellent time to be thinking about that and trying to address it proactively before, even if things have kind of moved already.
Or it's worse.
It could get worse. I mean, I don't know that it will immediately. There's speculation that it's probably not going to get much worse immediately, but I think the trajectory is probably going to be different, and I think we need to be thinking about how should we align things
Right.
maybe a little differently. Similar for if you're thinking about real estate or getting a mortgage, it's probably a good time to do it now rather than in a year from now or 6 months from now.
The first